Now let's answer your questions. First up, a video one for Jenny on Energy Transfer.
Hi, this is Lou from Collegeville, Pennsylvania. I have Energy Transfer, ET, and a Roth. I've since learned you shouldn't have an MLP and a Roth. But my question is, should I continue to hold or sell that now? Thanks so much.
No, Lou, thank you for the question. Jenny, what's the answer?
So the old school, misconceived, conventional wisdom of you shouldn't have an MLP or a partnership in a Roth or in a regular IRA, I think that's wrong. And I've heard this for years, for 20 years almost, and it's like the old school green eye shade accountants who propagate that myth. Because what they're saying is you're still going to need to pay taxes on the distributions. The reality is you only need to pay taxes on the unearned business income from it, and only if it's over $1,000. So the UBIT tax that it would generate is usually very, very, very little. It almost never goes over $1,000, even in a reasonably large IRA, whether it's Roth or regular. So I think you actually should hold them in IRAs. They're very, like, unless you have a $20 million or $10 million IRA. For the most part, you're not going to bump into the place where you're going to need to pay taxes on that. In fact, I'll put up an article on my Twitter after this. So that part, misconceived, old school misconception. On Energy Transfer in particular, look, it's got a 9% yield. They beat earnings when they announced about a month ago. Really strong pipeline assets. So I would hold that whatever account it's in.
All right, good stuff. Next, a video question for you, Shannon.
Hey, Halftime, love the show. It's Brandon from Connecticut. I want to know your thoughts on JPMorgan. Do we buy, sell, or hold? Or is there more downside from here? Thanks, guys.
Okay, what do you say?
Well, thanks for the question, Brandon. So JPMorgan, I think, continues to be a buy for us. If you like this in a flat yield curve environment, you're going to like it even more if we get some yield curve steepening driven by economic growth and inflation. There's been some missteps lately, particularly with the PPP loan program and some questions about the handling of that. I think that's near-term execution risk, but could offer a good buying opportunity. This is definitely a good long-term hold to be the core of your financials exposure.
Okay, thank you for that. Farmer Jim, to you from Carroll in Florida. What's the outlook for Walmart? Now a good time to buy?
Well, this is a simple answer. Take a look at a 5-year chart of Walmart. It's almost a straight line up and to the right, and it's going to continue. We know that retail sales are high and growing. We know that Walmart's got a fantastic online presence. 26 times earnings is right where it should be. This thing's going to continue to grow as it has in the past.
All right, to Nautilus Pete now from Chris in Omaha. What can we expect from Marvell following earnings, Pete?
Yeah, Scott, I think the interesting thing here is they have high demand, but the problem is they weren't able to address it. They weren't able to get after it. And I think with this acquisition that they've made, I think going forward, they're going to be able to add to the supply chain. But right now, obviously, because of the pandemic, they did have some issues. But that's always a good problem to have, is way too much demand. And that's exactly what's going on here. Stock sold off a little bit. I think that's an opportunity.
All right, we're working on Pete's shot to get him back up again. But thanks for calling in, Pete. You stay with us, I hope. Rob Sechin from Pete in Connecticut, not Pete Najarian, somebody else. With 30 years till retirement, asks Pete from Connecticut, do I need bonds, or can I minimize some risk by making a part of my IRA, quote unquote, safer with stocks like Coca-Cola, Johnson & Johnson, Verizon, and JPMorgan, et cetera?
So this is the all-time question, stocks versus bonds, specifically dividend stocks versus fixed income. And I don't think that rates are going to move enough to impact dividend stocks. And I also think that you're going to see a capital allocation decision that's done by other long-term investors, actuarial investors, think insurance companies, foundations, endowments, that lead them to stocks versus bonds. So I think you can buy stocks. I think that's a pretty smart decision right now, given the absolute level of interest rates.
Okay.